All right, let's dive in. We've got an analysis report today making a really strong bullish case for BigBear.ai, ticker BBAI.
Yeah, the BBAI to the moon energy, it definitely jumps off the page. I mean, you can feel the excitement of finding a potential hidden gem.
You really can. The whole premise is that it's this undervalued play that's just flying completely under the market's radar.
And I love that angle. But, if the goal is to convince serious investors and build real credibility, we have to make sure the foundation can actually support that $10 plus price target.
Exactly. The substance is there, but the way it's presented and sequenced, it needs some work to take it from just a high-energy market observation to a really rigorous thesis.
Let's get right into it then. I want to start with the very beginning, with the hook.
Okay, yeah, because right now the report's aggressive reliance on the immediate short-term price jump, it risks overshadowing the whole under-the-radar story.
I get the temptation. I really do. You lead with the news, right? It opens with a bang, the plus 11.19% gain, the 626 close, the volume spike. It all screams urgency.
It does, but that urgency, it comes at a cost. By leading with all those market signals, you're basically positioning this as a momentum trade, a reaction to a chart pattern.
Right, breaking that $6 consolidation zone. It makes the analysts sound like they're following the price, not that they were ahead of it.
And that's the whole ballgame. If the thesis is flying under the radar, you have to show you found something the market was missing.
Exactly. When you lead with the price jump, you're immediately shifting the focus away from the structural changes. The SH platform, that government backlog.
It just becomes another technical play. And for a sophisticated investor, that immediately lowers the perceived quality of the whole analysis.
So the suggestion is pretty straightforward, really. You have to flip the narrative in that hook. Don't start with what happened today. Start with why the market was wrong until today.
I like that. Anchor the whole thing in some neglected fundamental or a unique part of their business.
And then you use the price jump as the validation. It's the proof that the market is finally catching on to the secret you've already uncovered.
Yeah, it makes the whole analysis feel so much more conviction-backed. So just to make it concrete, we can think of a couple ways to do that.
Okay, so one approach, you could start by contrasting BBI's unique and really sticky government backlog against its peers. The high flyers like Palantir or NVIDIA.
Establish that fundamental floor first. Get that safety net in place.
Right. And then you bring in the 11% price spike and frame it as the market finally waking up to this differential. You can suggest that the big volume is institutional buying confirming your thesis.
It wasn't just a random event. It was a reaction to a fundamental reality.
Or you could take another route. Use the confirmed Q3 revenue beat, that $33.1 million, as your anchor.
Ah, okay.
And you label that moment as the point where the turnaround story was, fundamentally confirmed. And then you show how the market reacted to that news with the big gain.
Either way, you're putting the fundamentals before the technicals. It supports the claim of a strategic breakout, not just chart chasing.
Exactly. And setting up that narrative correctly leads right into the most critical part of the whole thing.
The price target. Which brings us to our second big critique. The report asserts a really critical valuation gap, but it fails to provide any specific data to prove that BBAI is actually still cheap.
Yeah, this is a non-negotiable one for me. If you have a section called Moon Math, you have to show your work.
Right. The report just says, BBAI at around $6 is still cheap compared to the multiples of other AI software companies.
And that claim is the absolute bedrock for the $10 price target. But as it stands, it's just an assertion. It's just hanging there with no support.
For anyone who knows what they're looking at, that is a glaring hole in the logic.
It is. A technical breakout needs a fundamental floor. If you're going to claim there's a valuation gap, you have to show me the gap. You have to quantify it.
Otherwise, that $10 target just feels like, speculative hype, not a calculated analysis.
So, to fix this, you have to integrate specific, defensible financial metrics. You compare BBAI to similar, higher multiple AI companies.
And that's what transforms "it's cheap" from a rhetorical claim into a data-driven argument.
And I think we should be specific about the metric here. The best one to use is probably enterprise value to forward sales, the EV over S multiple.
Good point. And it's probably worth explaining why that metric is the right one for this analysis.
Well, yeah, BSMBI is a high-growth company. It's not consistently profitable yet, so PE is useless. And price to sales on its own, it misses the company's debt, which is crucial for these smaller firms.
So EV to sales Gives you the cleanest comparison across the whole high-growth software space.
Exactly. And just explaining why you chose that metric instantly makes the report feel more sophisticated.
So practically speaking, the analyst means to pick, what, 2 or 3 comparable AI software companies?
Yep. Name them, list their average EV to sales multiple, and then do the math for BSNBI based on its Q3 revenue, annualized or projected out.
And then the crucial step is to state the discount. Say, BSNBI is currently trading at a 40% discount to its peer group average. That right there is the gap the whole thesis rests on.
And once you've done that, the price target almost writes itself. You can then just explain how closing that gap, say, moving BBAI from a 5 times sales multiple to a 10 times sales multiple, is what gets you to that $10 plus price.
It links the data directly to the target. It's not moon math anymore, it's just math.
It removes all doubt that the target is arbitrary. It's rigorous.
Okay, so let's move to our third point, which really ties everything together. The strategic importance of the Ask Sage acquisition. It needs to be integrated deeper into that moon math section as the catalyst for multiple expansion, not just, another source of revenue.
Right. The report does a good job identifying Ask Sage as fuel. It calls it a high-margin generative AI platform for the government. That's great. The identification is there.
The weakness is in the transition. When it gets to the valuation, the reasoning for that $10 target, it just goes back to these generic phrases like, if momentum continues and they crush earnings.
Or it's a technical probability. The connection between the high-margin growth from Ask Sage and the need for the stock's multiple to expand. It's just not explicitly made.
And that's the missed opportunity. Look, if Ask Sage is just more revenue, the stock goes up a bit. Maybe.
But if it represents a fundamental shift in the company's margin structure, in its growth profile, then it justifies a complete re-rating of the stock by the market.
Exactly. The suggestion is to clearly articulate that the old government backlog, that's the stable, sticky floor. That's the defense.
But the introduction of a high-margin Gen AI platform, like Ask Sage, that changes the entire quality of BBAI's growth.
And that scalable, high-margin profile is the specific reason the market should give the stock a higher valuation multiple. It's what separates BBAI from, like, a traditional low-multiple government IT contractor.
The argument needs to be that Ask Sage turns BBAI into a true generative AI platform company, and that category shift is what gets you to $10.
You need to use really clear analytical language to bridge that gap in the report.
So, for example, you could reframe the price target discussion. Don't just list Ask Sage. Use it to justify the premium.
Right. You could say something like, the $8 level is where the market prices in the Q3 beat and the security of the backlog. That's the foundation.
But the path to $10 plus requires the market to fundamentally re-rate BBAI as a true high-growth Gen AI company. And that means pricing in the higher margin revenue streams from Ask Sage.
Yeah, and you should be really explicit about the mechanism here. Use the term multiple expansion.
Yes. Say something like, the market is starting to price in the higher margins and scalability of generative AI, justifying a multiple expansion that shifts BBI from a services multiple to a high-growth software multiple.
That distinction is everything. It changes the conversation from if the price will move to why the valuation must change. It's so much more powerful.
It really is.